Hello, welcome back to Learn Oikonomia. In this video, we are going to look into devaluation and currency wars. Specifically, we are going to answer the question, how does devaluation lead to currency war? So we were telling that the devaluation is a deliberate downward adjustment of the value of a country's currency compared to the value of the currency of some other countries. So why this countries are going for devaluation? We have already answered this question in several videos which we were doing. So countries, if they want to increase their exports or reduce their imports, devaluation is one of the good step. It is one of the good step in the sense that it would be working well um, to achieve all these kinds of things. Countries that have a fixed exchange rate or a semi-fixed exchange rate use monetary policy tool. So you might be confused with depreciation, revaluation, all these kinds of things. But as I have already told you, please be very much sure about the difference between depreciation and devaluation. Devaluation is a deliberate kind of attempt by the government or the monetary authority to lower the value of a country's currency, whereas depreciation happens automatically. It happens as a result of the movements of the what to say uh, the market forces of demand and supply. So the government of a country, it might decide to devaluate its currency. Under depreciation, it is not a government activity. Devaluation reduces the cost of country's export, and it also makes the import of a country in a reduction manner. I mean, it reduces the import of a country. If imports are reduced, that means that the we need to pay less to the imported commodities, or we need to pay less in terms of foreign currencies. Because exports increase and imports decrease, what we have to do is that we have to increase our production in the home market. So production would increase, employment would be created, and also an important thing here is that trade deficit would be shrinking. In short, a country that devalues its currency can reduce its deficit because there is a greater demand for cheaper goods. Coming to currency wars as a result of devaluation. So we could see that in 2010, the Brazilian finance minister, this person has altered the world to the potential of currency wars. He used the term currency war to describe the ongoing conflict between different countries like China and US. We know still what is happening with respect to Chinese currency and US currency, and we have already explained the tendency of Chinese currency to go upward and US dollar to go downward. So there is more chance for Chinese currency to replace US dollar. While some countries don't force their currencies to devalue, there have been many fiscal as well as monetary policies that will make the currency of several nations to devalue. Monetary and fiscal policy that have a currency devaluing effect would encourage investment. Apart from increasing exports, it has a tendency to increase investment. So, on August 5 of 2019, what happened was that the Central Bank of China, they had set the reference rate below 7 per dollar for the first time over a decade, and this is in response to the new tariff of 10%. And global markets sold off on the move. The Trump administration responded that responded to this by telling that China is a currency manipulator, and this was just an attempt by the what to say U.S. government to make Chinese move visible to the entire world. So China trade war, but certainly not the first time China had devalued its currency. That there was some kind of trade war between China and US that happened as a result of the move by China. While devaluing a currency might be more attractive, but it would definitely lead to some negative consequences as well. Increasing the price of imports protects domestic industries because it would increase production of commodities which otherwise we had to import from some other countries. Now we are restricting our imports, so that means that we have to increase the production of such goods in our own country. Higher export relative to imports can also increase demand in the economy, which will lead to growth as well as this will lead to increase in the gross domestic product. So that is what ultimately leads to the growth, right? Inflation can occur here because imports become more expensive. Sorry, yes, imports become more expensive. Aggregate demand will cause demand pull inflation. Coming to certain real life examples, we have seen what happened in US, what happened in China, and how US identified China as a currency manipulator. China had been accused of practicing quiet currency devaluation and attempting to make itself a more dominant force in the trade market. Some have accused China, especially the US has been accusing China of secretly devaluating its currency. So as a result, China wanted to reevaluate its currency after the 2016 presidential election. However, after assuming office, US President Donald Trump, what he has done is that he has threatened China, especially because China, he says that he would be imposing tariffs on cheaper Chinese goods. So some fear that this might lead to trade war between China and US. And however, what happened was that according to the New York Times, the COVID-19 pandemic that has hit both the China as well as US very hardly. Global supply chains were hurt, and Egypt has faced constrained pressure from US illegal market trading, which began following the foreign currency shortage. The central bank devaluated the Egyptian pound. According to the Brookings article, we could see that International Monetary Fund required a devaluation of pound before it would allow Egypt to receive a $12 billion loan over the 3 years. So Egyptian stock market responded favorably to devaluation. We could see that the illegal market responded by depreciating the exchange rate of US dollar to Egyptian pound. So that was what happened. We could see that the currency wars between China and US would have its effect not only upon China and US, it has its implications upon different countries as well, because now the world is one. World is one because different countries are connected as a result of globalization. So I hope you could get some ideas with respect to the trade wars, currency wars, all these kinds of things, and how devaluation is involved in this sense. In the sense of, I mean, how devaluation is related to currency war, all these kinds of things. I hope you got some kind of idea with regard to all these kinds of things. So please like, share, and subscribe to this channel, and also you can be a part of my Telegram group and Telegram channel. I'll be providing links of all these things in the description box. That's all for today. Thank you.